All right, welcome to today's episode of technical analysis here on my YouTube channel. And today we'll be dealing with market structure. That is all about the structure of the market. Now, don't forget that at the end of this video, if you find any of it interesting, you can go ahead to subscribe to the channel, like this video, and equally comment, equally share to your friends so that they will get this knowledge that you're about to get all totally for free. Now, let's get down to business. Today is all about market structure. I'll be breaking down what market structure is all about, the types of market structure, and the break of market structure, and equally, most importantly, how you can trade this market structure. Now, market structure, these are structure of market. When you open your chart, your candlesticks, the structure at which combination of these candlesticks built, that is the structure of the market. Just like every other living things, like human being, animals, and we have our skeletal structures. And once there is a break in this skeletal structure, anywhere or any point in the body, they will need a fix, or they will need a fix before the person will actually get back to normality. The same way, market structure, once there is a break of this market structure, then it will need to be interpreted in another different angle. Now, let's get down to business. We have types of market structure. We have the trending market, and we have the ranging market. These are the two types of market structure that we have. Now, I will explain with, let me say, a little drawing. When you see something like this, you know this is a type of market structure. This is a trending market. It is called trending because it is actually moving high and lows, high and lows, high and lows. And in this type, under trending market, we equally have two types of trending market, which is the uptrend and the downtrend. A downtrend where we have something like this. Now, remember, when the market is trending, it doesn't always just go straight away this way. It doesn't always go straight up this way, or when it's coming down, it doesn't always come this way. There's always an appreciation, a pullback, appreciation, a pullback, appreciation, a pullback, appreciation, a pullback. This structure, it is building when going up, or it is building when coming down. That is what we call market structure. This particular structure, it is building when going up or when coming down. That is exactly what we call market structure. So that is your structure. When you open any chart, you're going to see stuff like this or stuff like this. Now, under ranging market, we have markets like this, where the highs are almost equal and the lows are almost equal. That is for ranging market, where the highs are almost equal and the lows are almost equal. This is an uptrend and this is a downtrend. So these are the three types of market structure you will see in the market. Now, when the market is looking this way, it is advised for you not to trade. It is not a best form of structure to trade. But when it's looking this way or looking this way, then you can take your trade by looking for the best entry, of which I'll be teaching you how you can take entries or you can trade these structures here in this video. Now, let's move down. In an uptrend, where the market is moving this way, now, this is how we identify it. We call it higher highs. The reason why it's called higher highs is because it is an uptrend. But if it is a downtrend, it's called lower lows and lower highs. Where in an uptrend, it's producing higher highs. Sorry, it's producing higher. Here is a higher low, higher high. Here, higher low, higher high. Then we have higher low, higher high, higher low, higher high. Reason being that this high is higher than this previous high. That's why it's called higher high. And this high here is actually higher than the previous high that should be around this way. It's actually higher than this. So why this low is higher than the previous low here? This low too is higher than the previous low here. That's why it's called higher highs and higher lows. Why higher is always coming first is to tell you that it is an uptrend. And here we have lower lows. We have lower highs, lower lows, lower high, lower lows, lower high, and lower low. It is going lower on a downtrend. So whenever you open your chart, make sure you identify the structure of that market before you can proceed to knowing what to do with the market. Now let's take a look on the chart to see if we can identify this uptrend, downtrend, and equally a ranging market in the chart before we can continue with this video. Now let's take a look. Let's take a look at a practical example of market structure on the chart. Now follow my arrow. When you want to draw your market structure, please try as much as possible to reduce the time frame into a bigger time frame. Like I've seen here, I'm making use of 4 hours time frame. That's when you can identify a good market structure. Now let's take the structure of this market. Let's just start from here. Let's say this is a downtrend. Let's say this is our lower low here. This is our lower high. Let's drop the lower high here. Lower low here. This is our lower high. Or let's take the lower high here. This is our lower low. Our lower high here. This is our lower low. Now, instead of creating a lower high here and then breaking down to continue the trend, it went for a higher high. At this point, this is the structure of that market, and at this point, you're allowed, that's where break of structure comes in. This is the structure of the market for a lower downtrend. Now let's take it for an uptrend. This is a higher high. The market change structure. This is a higher high. This is a higher low, and this is a higher high. Higher low, higher high, another higher low here. The market is still moving, maintaining the structure. Another higher high here. Another higher low here. We have another higher high, and then boom. This is the structure of this market, and that is exactly what we mean by market structure. So when you want to approach a chart, approach it with the structure of that market first. When you identify the structure and the trend of the market, that is when you can know what next to look out for. Like I said, there is plenty of confluences. You don't just trade in isolation. There's plenty of confluences you will consider before you take a trade. But market structure is one of the strongest. Identify the structure first, then you know what next to do. Now you've understand what market structure is all about and how you can identify it on your chart. Now let's move over to break of market structure. At this point, whenever this break of market structure occurs, that's when you are advised to trade. Now let's look at what it actually look like. Break of market structure, what it look like in an uptrend and in the downtrend. Let's say we have an uptrend this way. You have the market moving this way. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then after every higher high, now instead of creating a higher low around there, are you following? Instead of creating a higher low around there, the market came down to create a lower low here, thereby breaking this previous low here. This is a good example of a break of structure. Now at this point, it has taken out the previous low, the previous higher low here, creating a lower low here. The market is actually breaking structure. And what do you expect from this market? For the market to start a downtrend, which is creating now a lower high, then lower low, lower high, lower low. That is, the market actually changed structure from uptrend to downtrend. I don't know whether you understand. Now let's redo it. You have a trending market in an uptrend, higher highs, higher lows, higher lows. Now instead of creating after this higher high here, instead of creating a higher low here, it went ahead to create a lower low, taking out the previous high. You can mark here to be your break of structure. Now the market, since you are taking out this previous low, you are expected, or we expect this market to start a downtrend, which is creating a lower high here, lower low, lower high, lower low, lower high, lower low. Now I don't know that I don't know if you can identify the exact thing to do when you notice a break of structure and how to take this trade. It is simple, very simple. Now look at it. After this break of structure here, you already know that yes, this market has changed structure from an uptrend to a downtrend. What do you need? What do you need to do? You now need to target where the retracement will be, where the market is going to create its lower high, targeting it around here because you know it's not going to take out the previous high that was broken here. So you're going to target where the retracement is going to be so that you enter the market and short the market and start going down. I don't know where you understand. The same thing applicable to a downtrend. Let's take it for instance, a downtrend here. You have lower highs, lower highs, lower low, lower highs, lower lows, lower highs, lower low, lower highs, lower low. And at a point, instead of creating a lower high, it went ahead to create a higher high, breaking a structure here to the upside. Now, what do you need to do? You already know that this market is going to retrace to create its higher low somewhere around here. So you're going to look for your entry somewhere around here so that when the market comes to create a lower high, it taps into your entry and then continue an uptrend this way, and you make your money this way. So that's exactly how to trade a breakout structure, and that is exactly what you should look out for in the market in order to trade typical market structure. And it's a very strong confluence. Yes, trust me, market structure is a very strong confluence on taking trades in the forex or crypto future market. Now let's take a look at it on the chart. All right, let's equally use the market structure we have drawn in the past when I was analyzing or showing what market structure is all about. Let's use it to identify our break of market structure. Now, this is on a downtrend, like I said before. And at this point, after the market created a higher low here, a lower high here, created a lower low here. Instead of it created a lower high here, but this is not a valid lower high because a lower high or a higher low is valid only when it has created another lower low. Instead of creating another lower low, it bounced and broke this previous lower high here. Broke it thereby creating a breakout structure here. Let's draw it out. Let's mark it out and then label it. Creating a breakout structure at this point. Now let's label it BOS. That's breakout structure to the upside because we were on a downtrend before. Now, how are you going to trade this market since you've identified a breakout structure? You already know that you should be looking for an entry within the last traded zone, which is this zone, is the last previous low of that particular downtrend before it starts changing to an uptrend. So you should be targeting for a retracement to that zone, then you move up, which is around here. So it is safe to just mark this zone out. Mark this zone out. And when you mark this zone out, you set up your long position. At that particular rectangle I marked out there, you set out your long position to wherever. I'll teach you how to choose your take profit. You can choose take profit probably with the previous high, which is more like the seller's buy liquidity or the buyer's sell liquidity. This point is a good buyer's sell liquidity. Now you can see the market retracing from this point after the breakout structure here. You can see the market retracing and kick you in, and then boom, we are up to final profit. That is how market structure work, and that's exactly how you can target and get market structure. That is exactly how market structure work. Now let's take a look at where it occurred on the uptrend. Let's take a look at where it occurred on the uptrend. Let's say you're trading market structure alone. I've gotten this up movement, and how many RR is this? This is about 3.3 RRR, risk reward ratio. Now let's take it on an uptrend. The market continue going up, and at this point, instead of the market after creating a higher low here at this point, after creating a higher low at this point, instead of it created a higher high. Instead of creating another higher low, it went ahead to create a lower low down to this point, thereby causing the market to break its structure at this point. Let's equally mark it out and label it. To break its structure at this point, let's label another break of structure to the downside here now. Another break of structure to the downside. And now, what are we expecting? We are expecting a retracement in this particular zone. That is where we are expecting a retracement in this particular zone. And what did the market do? The market came right to that zone, even though it didn't pick it so well, came down to that zone in the fair value gap there and peaked, and then the market changed structure. We are already moving down now. So you can see that if you trade only market structure, there is a high probability that you'll be winning your trades back to back, even without having other knowledge of liquidity, fair value gap, and other confluences. But market structure, it is very paramount in trading. It is very paramount in trading. So that's that about market structure. I hope you understand this particular video and how the market works and how it builds its structure, equally the break of structure, and how you can take advantage of it by trading break of structures. That's that for this video. If you find this video very interesting, you can go ahead to subscribe to this channel, equally share it and like the video and comment under this video. Share to your friends so your friends can actually grab the knowledge you are grabbing for free here. That's that for that. Stay tuned for our next episode where we'll be talking about confluences and equally liquidity.